The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Thursday, the 26th of June, almost wrapping up the month. What a month. And it's funny because over the years, over the decades, I have this memory. I haven't even checked it. I have it just sitting there in my memory bank that says June has often been a month that started off weak and then sometimes almost to the 2 days before the final day of the month, market day of the month, and then there'd be a huge move to the upside. This is a little different because we went sideways for a little while, and then we had that big rally, and then we had the sharp pullback from the last weekend overnight going into Monday morning, and here we are. Doing very nicely. So the Dow's up 170 at 43,152. What am I looking at? I'll do a little more tomorrow when it's Technical Friday. But right now, I'm just going to tell you this technique that I developed a long time ago where, you know how people draw trend lines? I do a double trend line. In other words, I make it like a mini channel. So within the context of channels, I still do a little mini channel. And that says that sometimes the price will go up in a diagonal move, and that'll become resistance. But it isn't just the line. You want to have a preparation for the line. So it's the same thing on the downside when it becomes support. So look at this. I'll expand this if I'm on the right chart. I am, right? Let me expand it. You'll see that we've got this inside track, and it's red because that's the resistance. It's green because if you break that upper trend line of this little narrow, I call it the Chapman wave inside track repellent zone on the way up, and on the way down is the propellant zone. We'll see it many times in any of the charts that I'm showing today. And it just says simply that if the Dow can break above 43,000, it's at 43,152 right now. The high so far has been 43,236. But the line itself, it's a rising line. So today's line says if we can start to go to the 43,350 area, we've kind of broken that resistance. But at the same time, if you're looking at the S&P, there's the S&P cash at 6116.56 up 2420. This is a leg C. And in the Chapman wave methodology, a buy signal that gets upgraded to a buy mode invariably goes to at least four higher peaks. That's a peak D. So let me just show you this quickly, just right there. So here we are. Here's the technique, a simple technique. Identify the lowest low bar, make sure it's the low bar, then count each successively higher peak, alphabetize them sequentially, A, B, C, D, E, F, G, but it's that fourth highest peak, peak D, where other things can happen. And when you get upgraded, when the symbol gets upgraded from a buy signal to a buy mode, the implication is that it should go to at least four higher peaks. It can go higher, but D is where you can get a sharp pullback, get an instant restart to have another 4 peaks higher, or you can go sideways, but D is your objective. Okay, so we've got to C, leg C. If whatever the price is for the high today, if there's a lower high by 1 penny tomorrow, that makes a peak C. Therefore, we couldn't get a D until Monday of next week at the very earliest. It could even be Tuesday. So I'm anticipating that we are going to go to higher highs. There's going to be a retest, and I had, when I was speaking to Tim Ord the other day, when I subbed for Tommy in the interview with Tim Ord from the Ord Oracle, he was talking about double tops, and I have to agree that double tops are very often a V-shaped double top, and when you say double top, you mean, it's going to fail. I should just say test of the previous highs. A cup formation is not anywhere close to as powerful as a V-shaped formation. Why? Because in the V-shaped formation, there's been very little on the way down, very little support, and on the way up, there's been very little resistance. So in this particular instance, if you're looking at the QQQ, which is up 2.21 at 543.39, an all-time high. 540.81 was the major high back in February of this year, comes sharply down, makes a V-shaped pattern, comes all the way back. I've got a Chapman wave inside wedge. I didn't even finish drawing this in. Make that green. Right there. Okay, left side, you see, if I did a left side, right side bar symmetry, and I go to this low right here, this low, the week of the 7th of April, April was the low, and I click just to make it left side, right side price time match, look what happens. We fail by 1 bar. Just, well, actually more. Only this week have we gone through. So very often, if you can't do an exact equal number of bars with the plumb line to the low, to the right, and you can see that even though we've only had a leg, this is a peak A. From the low that was made right here in the 420, for the low that was made right here, I should have typed it in the QQQ at 402.39, this is still the first peak right there. And then you had 1 bar of a fractional lower high. That makes peak A. And now you've got leg B. So the weekly chart is saying we should still go to a leg C and then a leg D. And then you've got to be careful. So the higher above the left side high, in this case 540.81, there is a close in this particular chart, the greater the chances are that you've raised the base of support considerably. If there's a failure within 1% or less than 2%, on a closing basis, you've got to be careful if it starts to go underneath that left side level. So make 540.81 the critical level that you watch on the short term. And here we are at 543.50. It's not a big deal, just 2 points, but it is higher, and that's important. Okay, now we're going to go to the IWM, which has been lagging in chart formation. IWM is the Russell 2,213.14, up $1.17. It hasn't even got to a leg D yet. It should try to get to that leg D. And the weekly chart, 9-period moving average has finally crossed positive. This is the second week. The week hasn't closed. We have to wait for tomorrow at 4 o'clock to see if that is the case. But so far, that's a good sign. Then it just says at 205, you're at 213 right now. 205 should be very good support. I do want to go to, I had some questions. I'm going to get to them. Let me just finish this. Gold down 8. It's just really not breaking down. It should be breaking down after all. Middle East conflagrations have just kind of eased a little bit. A little more than a little bit. Yet it hasn't broken down. But if you look at the GDX, which is the gold miners, that's telling you that rectangle that I drew in that said there should be support, well, it went under it, now it's over the support. This is a good sideways action in the market. Vector's gold miners, which is the reason why for subscribers to my opening call, we've kept our gold position. We've taken profits and some, but we've kept our core position because I think it's still in play. Let me just do silver. Silver right now is trading up 31 cents, holding really well. I told you before that as far as I'm concerned, silver's been holding way better than gold. We still have our silver position. It's doing quite nicely. And I do want to go to high-grade copper, which is having a really nice day today. Whoa, even a nicer day than nice. It's at 512. It's up 15 cents. Very good. Broke out leg C in the weekly. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
I thought you were back and I needed to put this in. Can I read it? Titan, is this Titan Core or Titan Ink? I think it's Titan Ink. International. Okay, International. So I had a couple of questions. I'll do them as I'm going through the different indices. I was talking about copper, but let me just get to this. And let me just have a quick look here. Titan Industries. Titan... International does, and what do they do? I should know. I've looked this up a long time ago. Global manufacturer of wheels, I remember, Titan, of course. Global manufacturer of wheels, tires, and undercarriage components for off-highway equipment in the agricultural, construction, and consumer markets. They serve both original equipment manufacturers, OEMs, and the aftermarket customers. Okay, very good. Look at that weekly chart. A very strong monthly chart to this month, but it's done that many times and it's failed. The weekly chart has gone to A, B, and this is leg C. I must always check to see that you did get the lowest low. That's the most important thing. And now we've got the daily. So I wanted to do this, break into my looking at the different indices, because back in my mind, I had a feeling that this was an important stock in the economic area, and certainly it is. Now, here's a big question. So, I missed it. Thank goodness I missed it, because I'm looking at this and I'm saying something's wrong. Look, there's your Chapman Wave Instant Resale. What a great, this is not Technical Friday, but if you don't mind, I'm going to treat this as Technical Friday just for the moment. So the technique I developed a long time ago, and like many of my techniques, they cost a lot of money to figure out and to finally get right. Because unless you put it in real time, really, you can do as much analysis as you want, theoretically, but when you actually put your money online, it makes it 127.27 728. So having done this for so long, I am forced to look at each higher peak, and I should be able to see every penny difference, and I have, thank goodness. So that changes that. So that's not an instant restart. Okay, good. I'm pleased that I did this because there's a bit of a challenge just in terms of getting the notation correct. It's a very easy process. Steve Rhodes has a good way of doing it because it does it automatically. I don't do it automatically because there are certain places where there's just enough questionable information that I've developed techniques for that says to me, all right, that it's a different count than what you would normally expect. So this is A, B, C. This makes sense. You know, it's funny, you do the charts enough and you look at it and you say something's wrong, and I found out what was wrong, and this went to an E. And now we've got the question of, is this an F or a brand new A? You don't have to make a decision about this, but it is absolutely a question, because if it's a brand new A, that's really positive. If it's F, you've got to say, be a little careful. So at 10.07, up 85 cents, up 9%. Titan, TWI is a symbol, trading very well. So the question, I think, actually came in yesterday or the day before, and I can't remember if I answered or not. If I did answer, I would have probably said it needs to get into the 950s to really show that it's breaking to the upside, because $9.69 is the 200-period exponential moving average, and it has to pierce that, and obviously has done that right now. So this is much better. This is good. So if you're long, and the question is long, I'm just going to say, congratulations. You got in perfectly, because now it's breaking out, and you cannot look at the monthly chart. You have to wait, not for this June, but you have to wait for July to really see what's going on there. But the weekly chart, stochastics at 77%, but expanding. On balance runs, the blue line is a little bit overbought, and the MACD has this huge, big move to the upside. Now, I'm always a little nervous when you're going from negative to positive with such a big, like the mouth of a whale. This wide aperture between the green 9-period differential and the red 26-period exponential moving average. Sometimes it says you're getting a little overbought too quickly. So that just says to me, this is very good. But what you've got now is this whole area to the low that was made just 4 days ago of $8.58. That whole area of 870 to 850. So far, I'm considering it to be short-term, very strong support. Okay. So I hope that helps you. I like the fact I want to open this up for a weekly chart to show you something else. I needed to look at this. Has it broken out from the rectangle formation? And look at this rectangle formation right here. From that high all the way through to that low. You can make it like that low there. And I also like to be very conservative when I go to the bumping up against all the resistance levels there. Look, on a weekly basis with another day and a half to go, let's call it 2 days to go, the whole area of this high right here, the high of the week of the 28th of Feb, with a high of 9.60, that's the question. And the 200-period moving average. And it says that this really, what started the big move to the downside, breaking the 200-period moving average, was the week of last year, May the week of the 3rd, where it has a high of 1172 and a low of 962. We're into this bar. And that just says that this little doji candle right here, 1197 becomes your kind of resistance points that I would look for, because a break above that on a weekly basis would be very positive. So I hope that helps you. It's the first time it's broken out from this very long consolidation. Now, there are all sorts of things. I've looked at this as if it was a Chapman wave restart, but once you take out the left side low, this is a brand new buy signal to buy mode in the weekly chart. But it has the characteristic of a restart, meaning it kept fading, didn't get to a D, kept making lower lows, but this one did make lower lows in the sense that it didn't retest the previous low successfully. It took it out. So I'm just saying this is a brand new move to the upside. So it needs a little bit more credence. And the only way I can get credence is over the next week and a half. Let's call it 2 weeks. Let's call it going into the first full week of July, which will be the week of the 7th going through the 11th. So if by the 11th you've had at least one weekly close above 10, it's at 10.06 right now, that's going to be a good sign because it's above the 200 period. Moving out for the first time since that big smash a year ago, April. Okay, so I like it very much. Good eye, very good eye. Now, let me go back. So high-grade copper, it was going up very sharply. Yesterday it had a good, day before it had a good move. Yesterday it kind of stalled. Today it's breaking to the upside. I can call this a leg even. Everything about it is suggesting that the stochastic is rallying. It's still weak at 51%, so it has room to go. And the MACD is curled up. But this relative strength is very strong on the daily. On-balance volume is a little bit overbought. I'm calling this a C. I'm not giving it an alternate count. I'm saying a brand new buy mode in leg C, and it should go to a D. So that's a positive. Will it get copper continuous contract? Will it get to the March 20, the week of the 28th high of 5.483? I think this move has the challenge of the 520s. If it can close above $5.20 just once, then I'm going to say yes. And it's got the rectangle, higher highs and higher lows, can go to a peak D just under, just on, or just above the previous high, and then you've got to reassess. And so copper's looking very good. I'll be right back. Basil Chapman, Dow's up 240, S&P's up 30.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back. And let me just do this. What is this? Toast Inc. Toast Inc. You know, I once did this. I remember I wouldn't have forgotten the name Toast. And the symbol is Toast. And let me just go back here and say, Toast Inc. does what? Toast Inc. does. So Toast Inc. is a cloud-based, all-in-one restaurant management platform. I remember it now. It provides restaurants with a comprehensive suite of software and financial tech. There are a number of software companies like this, including point of sale, POS, online ordering, team management. Okay. So this is a rectangle formation. TOST is trading at 41.50. Oh, I had a question. I'm going to get to it about Robinhood. I'll do that in a moment. Sorry, I didn't mean to skip it. I'm just trying to keep up with all these questions that are coming in. You know what? I'm going to suggest that there's an alternative count, G/C, in the monthly chart, and it's still technically quite good. And the monthly chart has got a weekly chart has got a really whippy up-down kind of move that's made it into a new buy mode at a peak B, and it's kind of stalled here, but I'm going to draw another rectangle like I have in the weekly chart and say this is just stuck for the moment. So what would I do? The question, it's not what I do, it's what you do. You said, Basil, TOST, 5.825, gapped up, has yet to complete test of the gap for a long-term position. Can I 50% nibble here? Toast, great finance technology. Yeah, you know, the chart itself, having made an IPO back in the 50s in 2021, it pops up within 3 months to the 70 level. I wonder if there was a round number high. 69.93. Oh, very close, but not. And then it has a little bit of a tumble and tumbles down to $11.91. And now it's making a stair-step move, peak A, B, C, D. Now, there's an instant restart here. That's why I've got this G/C. So the monthly chart, the technicals would have been really good, but the stochastic had a big fall to the 71% levels. That says it needs a little bit. The weekly has to help the monthly. Okay, so the weekly technicals are all pretty good, but it's stuck in this range. So this is what the fact that it took out this today, it took out this left side support low, and your question is, 50% nibble. I'd rather recommend to you that you do a 25-cent nibble, and I wouldn't even think just yet of where I would add, because the way it's held up, you see this huge gap. One day it's tootling along. This is on the 8th of May, tootling along in the 35, 37 area. Whoa, the next day it gaps up, and it gaps up with a low of 39.75, and it hasn't been even close to that until today's low of 40.24. So that just says it's getting closer and closer. So what I'm going to recommend is you want to get your foot in the door, because I think you've done the homework and you'll like it. Number one, I wouldn't go 50% here. Not 2 reasons. One is this sideways rectangle formation very often is a little bit of distribution, not a little bit of distribution. It could be a lot of distribution, which says that because it didn't break into the 46s to really take out all the previous highs and just really say, hey, I'm free to go in this leg C to the upside in the weekly chart, I'm going to say I would only just nibble. So just a starter position, 25%, I'd even have a little less. Just get your foot in the door at 41.40. And I don't think I would do anything about adding to it or anything like that until it, on a daily basis for 2 days in a row. It can't even be one day and then not, and then another day. 2 days in a row, it has to close above 43.20. It has to get into the 43s and close there. Then let's look at it together. All right? So this is Tiger YouTube, and the most important thing is the fact that it closed. It took out all the lows from the last 2 weeks, and now it's above that at 41.39 is a positive. But the fact that it actually went down there, it says to me, it's making lower highs and lower lows, not by much, but enough to say that the gap up low of 39.75, if it goes into the 39s in the next week, I think that's going to be a bit of a problem. So foot in the door, yes. And then let's look at it together. I'm not saying don't buy it. I'm just saying you want a perfect entry point. I don't see this as a perfect entry point now. I could turn around and say, oh, that was a mistake. That wasn't perfect. I'd rather say I'm buying strength than weakness. Okay, I hope that helps you. Now let's go back to the question. Hi, Basil. Please look at Hood from the short side. Tested all-time high yesterday, weekly ABC up, completed to the penny essentially, potential weekly Chapman wave G/B top. Obviously the G would be the shorter's preference. First target 77 area, more aggressive 66 to 65 next. Thanks. So let's look at this together. Hood, Robin Hood, been a kind of a favorite in many ways, but actually we've got less than we would like because we've started off in the 16s and we've had different positions at different times. And here it is at the 83.78 level. Now, let me just do this. So you remember we were talking about double tops? See, this is the perfect example where you've gone almost like a V-shaped pattern. I've got the cup formation just because it's easier to read, but it's basically a V-shaped pattern, and you powered right through the 66.91 high of the week of the 10th of February 2025. That's what you want to see. That says no double top. In fact, it turns around to be the opposite, to say that if there's a major turnaround for whatever reason, it would have to be a market condition. Because Robin Hood's kind of in the sweet spot right now. I don't know how long that'll last, and I'll say we're long. But most importantly, this whole area between 68 and 66 becomes really important support, very important support. Okay. I've drawn in this huge cup formation for the high, 85 round number high of August of 2021, just after the IPO, 2 months later, and then it tumbles to the sixes, and then it starts a move that says, a dreaded H pattern, yep, successful, and then it turns around to be a deep cup formation, and the 9-period moving average crosses positive. I need to show you this here because it's really important. So I'm going to go to the, did there something happen here? Is this the chart? Well, I hope yes, Robin Hood. Look at the way Robin Hood just walked the 9-period moving average since the April low, since above the April low, but from the 23rd, where the 9-period moving average crossed positive in the 47s, 46, 47 area, and it's still green. So it hasn't given any sign at all yet of that 9-period moving average turning pink. And to do that, you'd have to see 72, something like that. It's at 83 right now, probably 72 or lower to get that green 9-period moving average to go pink. The MACD is still positive, but it's a little lower than it was, but it's positive. So that's the MACD, yeah, and the stochastic is at 80, if I can read the darn thing, 88%. That's still very positive. Look at the 9-period moving average, the green line. It's a little bit overbought. I'll come back. We'll talk about Robin Hood and why I don't really see it as a short, but we'll talk about that as soon as I come back. And the Dow is up 286.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I've had so many questions. Let me just deal with this. I should have done this a little earlier. So a question came in about Basil. Would this be a good example of where we're in a wall of worry and both the bulls and bears feel like they're in control? Actually, it's the exact opposite. I think the bulls don't feel they're in control and the bears don't feel they're in control because it depends on what day. You know, on Friday, the bulls looked great on Sunday night to Monday. Boy. And then all of a sudden, the bulls are back again, and the bears are saying, what's going on? So let me just make it very clear that the conditions that I'm looking at right now, emotionally, I mean, I can't tell you how many people. I bumped into some people yesterday. I don't even know if it's maybe 8 years, maybe 10 years, a couple. And she said to me, oh, I recognize you. Well, what's your name? I didn't recognize her at all. And I said my name, and she said, oh, yeah. And then, my husband, and I looked at him, and then immediately I knew them as a couple. You know, like whenever I'm together with my wife, people recognize us as a couple. So I recognize, well, first of all, I'm saying to myself, gee, have I gone that old as well? But anyway, that's besides the point. And then we talked about this, and then they said, oh, what? I said, how are things going? She said, this, what's going on around here and all this, just, oh my God, with gloom and doom, absolutely. And they live in a very nice suburb, and they do very nicely. So I'm looking at this, and I'm saying, almost everyone that I speak to who's middle-aged or older has got this thing saying, what is going on? And young people just go about their lives. So all I'm going to say to you is that the market, I'm looking at it this way. here's a good clue. So we've got Dan at the Den who says that, gave me a note saying, I tend to try to pick tops and bottoms, willing to take a shot and exit if wrong. Some of my secondary signals said taking a shot makes sense, so I added puts just above 84. I'm absolutely with you. I had the same feeling. We don't have enough in our Robinhood, the core portfolio to say take off a little bit more right here, almost at the all-time high. We made the all-time high yesterday, just exactly the way we drew it in as a plan. But I would have done that. Now, going short is something else, because going short says that you're going to have a look at the market, but have a look at this. So the answer is the philosophy of this bulls and bears keep thinking they have the upper hand. I think it's the other way around. When the market's going up, the bulls are getting very nervous. When it's going down, the bears get very nervous. There's a different psychology there. So I have to do it technically. So Robinhood is an F/C. Now you said G/C, G/B in the weekly. I'm inclined to think that it's a B. That's what I'm looking at right now. I should actually have put in the up arrow because there's nothing here that says that this is not a buy mode in the weekly chart. And it's a great clue because you remember Bitcoin, I use it as a kind of a proxy. Look at Bitcoin holding nicely down 130 at 108.38 in this trading band that I've been talking about. I thought I put it in. I'll put it in right now. Just like a cup and a handle type pattern. And it's just digesting big gains. I don't know if it's ready yet to break into the 114,000 area, but if it goes up to 113,200, that is really positive action. So, 113,400. It's very positive. So I use it kind of a proxy with gold and other things, and the general public getting back into the market. That's what I'm looking at. So as a short, I know that you look at it as a very short-term short position, and then you go from there. I do the same thing. So all I'm going to say to you is, Dan, if Robinhood closes, it had a high yesterday of 85.55. Today it's got an inside bar. It's up 93 cents. It should be up a little more if the market is up like it is. So this is just saying to me, yep, it's starting to slow down a little bit. All the technicals are great. On a price point of view, if it closes under the low of yesterday, which was 81.30, 81.90. So if it closes, it's at 83.63. On a close below 81.30, I would say that's probably where there's a chance that it starts to move towards the 78, 79 level, 78. So, but I just go one step at a time. I'm waiting. Look, if the S&P, if I'm correct in saying the S&P is in leg C, you can't make a peak C unless there's a lower high. That means whatever the high is today, so far it's 6,129.00, round number. Anyway, it's trading right now at 61.26. So if let's just say this is the high of the day. So far, I don't know if that's the case, but so far, let's just say it is the high. The market is this close. Bing! Okay? That means if all of tomorrow, doesn't matter what the futures do, but if all of tomorrow, this does not go higher than 6,129.00, that makes, if it goes to 00, that's still a leg C. If it goes to 61,029, 6,129, 28.99, 0.9, 1 penny lower, that makes a peak C. And then I'd expect just one little pop to a D. And then I'm saying, let's be careful going into next week. But the weekly chart says, what are you talking about? But I'm just on a short-term basis. That's what I'm looking at. Okay, so let's just go back to that. Copper was SCCO was the question. Wow, that is a nice move. Up 630 at a 103.38. And so interesting because today I had for subscribers to get into a copper stock, and it's a stock in the single digits. We've missed it by a couple of cents, and I didn't really want to chase it. I didn't want to do anything that was an aberration to, C. Yeah, that's good. No, that wouldn't be. I'm just calling that an A for now. So this is peak A in Southern Copper, B, leg C. So this is leg C, very strong. Monthly chart is improving finally. So that's Southern Copper is looking very good. So what I wanted to do is I didn't want to chase it. But at the same time, I think I changed at the very last minute from where we would have had it right now to making it 2-3 cents lower, and we haven't got it yet. But the reason why, in this particular point, I don't really want to buy expensive, higher priced instruments. I want to stick with the lower ones because I want to have capital for the next pullback that I think is going to happen when I get to that leg D. Maybe a peak D in the S&P. So that's the SPY that we're looking at. For those of you who look at the ETFs or the funds rather than the cash. So this is a leg C. All right? So that's a leg C in the weekly chart. And this is where I do think that there could be a little double top-ish action here if it starts to stall. And that's what I'm going to be following. And we'll see what happens. So I answered that. CL. Is that CL for crude oil, or is that CL? Yeah, crude oil is having a little bit of a bounce up $1.11 right at the 200 period moving average. I think crude oil is going to bounce a little bit. Let's see where gold is right now, down 11. Not such a big deal, but it's struggling now. It's not doing much. Silver's doing very nicely. Silver is up 33 cents. Look how it's holding quite well. Did the Bitcoin BTC. I'm skipping. Oh, Oscar. OSCR, question about it. Doing really well. It's gone to a peak. D/C. So that's why did I call that a C? Oh, because it was underneath there. Sorry, this is a D. Oscar OSCR at 2050 up $1.32, holding very well. It held the trend line support in the weekly chart. I'll come back to Oscar Health in a moment.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So a question came in about from a subscriber. I treat it as an open question. I prefer not to, but I am. It's about BBAI. It's BigBear.ai Holdings, Edge AI Technology, etc. It had a spectacular move on Tuesday. And it's one that's been on our list for a long time. I'd actually mentioned it the day before and that day to say it's on our list, and it just spiked up. Okay. Well, I like the action, but I said it trades like a biotech stock. So I had, because of this candle right here, the big green candle going to the something like 546 or 552, I said, we want to buy it on a pullback because pre-market it was up another 25 cents or so. I said, no. We want to buy it under $5.10 in a split position, one at $5.10 and one at about $4.42 or 52 cents. Because that spike, I was expecting it to pull back. But look what happened. It ran all the way to $5.89 and then it pulled back horribly. Well, we got the one position, but if the whole thing worked out, we would have had both positions. And the reason was I wanted one trading position and one more try to have it as a core position. The day's young. Anything can happen with this. Now it is up at 557. Acting very well. But this whole thing should have been down and we would have had these two split positions instead of one. But I had a question about it. So the question is, where's the support? All I can say, if it takes out today's low of 483, we're in trouble. But right now it's holding well. We've already taken a little bit off, so that's all I want to do. So the next question came in just as we're wrapping up. Going to go to Steve Rhodes, and great program here. Check out my opening call daily newsletter. I'm forgetting something here. Oh, OSC Oscar, Oscar Health. Yeah, it's at 2057. It needs very quickly to get to 2183. When I say quickly, I mean within 2 days. Otherwise, it's going to stall here, but it's acting very well. It just means it's got a little ahead of itself and needs to digest the gains. And 1920 to 1818 is strong support. If the Dow today after 130 is up over 120 points, that'll be